Hey, good morning. This is your boy Idris. All right. Today we're going to talk about a simple topic, okay? This is a question I'm always getting. People coming at me asking me, "Hey, Idris, should I buy Dogecoin? Should I buy, should I sell Bitcoin? Should I do this? Should I do that?" Honestly, I'm not providing any financial advices, but let me tell you something. There is an easy way for you to determine if you should buy or sell, okay, or where you should buy and where you should sell. If not, that's the way I do it. I'm a pure technical trader, okay. I don't rely on all these news. I don't rely on you know always marketing sites and things like that. No, I just believe in my own intuition and my own analysis. Okay, it's not because my boy is gonna call me and say, "Hey, Idris, buy this," that I'm going to buy. No, I'm not doing this. Personally, I look for areas of support and areas of resistance. Okay, on higher time frames. These are areas where the most transactions or the heaviest transactions are happening. Okay, this is where what we call the big money is flipping and reversing the market. It's going to make more sense. So before I decide if I need to buy or sell something, I will go, to the chart and go to the chart and look at what the price did for the last few months. Okay, what the price did for the last few weeks. Then look for what the price did for the last few days. Then for I later go to the 4 hours and the 2 hours. Everything for me happening on the 5 minute, 10 minutes, 15 minutes, 30 minutes, 1 minute, 1 hour for me is noise. Okay, it will give you some indications of the actual market conditions, but will not give you a lot of information when it comes to the long term movement of the financial instruments. Okay, I keep it simple. Okay, number one, let's start by looking at the monthly chart of Dogecoin. Okay. Looking at this chart, I can say that overall Dogecoin is up. Okay, overall Dogecoin is up. By that I mean since Dogecoin came out, right? The all time all okay. Let me show you that. This is what we call all. Okay, so all time okay low or ATL. Okay, the ATL is here. Okay, and the ATH all time high is here. So overall, Dogecoin is up. Okay. Now, if you want to go um, on, let's say, if you want to look at the current market condition of Dogecoin is down. Okay, because Dogecoin is currently trading under the all-time high. Okay, so currently Dogecoin is down. Okay, currently, but overall Dogecoin is up. Okay, all right. Sorry. So all-time low is right here. Okay. Now, how can we? The first question is how do we identify the key levels? Okay, you are going to first off look for extremities on higher candles. Okay, let me tell you something. These people giving you, teaching you all these, classes of cryptos and all that, they will not like this. They will not the fact that I'm giving you what they're teaching for free. Okay. Some of them follow the news and all that. That's good. They have very good strategies that actually work. But me personally, this is what I do to have consistent results. Okay. If you decide to try it. It might work, it might not work. But I'll say try it on demo first and thank me later when it works. Okay. So you are just, it's that simple. Okay. You look for structures around these candles. And believe me, when we go to the 2 hours or the 4 hours, you are going to see what the price is doing around these levels that I just drew. Okay, this is going to make sense to you. Okay, so right now with these strategies, not is not like, oh, should I buy? Is where you should buy. Okay, okay, in which area you should think about buying, or in which area you should decide to sell. Okay, so this is the monthly time frame. Now let's go to the daily time frame. It's going to make sense now. See, now that you think about it, okay? Every time the price is around this level, is ever going to go up or down, okay? Now, let's say here, the price was here in this area, it went up. As soon as it reached this level, it rejected. So we call this level a level of resistance, okay? So this is resistance. This is a resistance level. So you got to be able to identify your areas of resistance and your areas of support. Okay. So this is resistance. Okay. Resistance. So every time the price rejects out of, rejects on a key level, we say this level acts as a resistance. Now, this same level of resistance right here, oops, sorry, can become support. Okay. Oops, support. All right. Okay. This is support. So right now, this level, if you look here, for example, right here, what is resistance right now was earlier support. By support, it means the price is acting like the floor. Okay. So here, the same resistance can also be support. Okay. So here, the price came, broke. Okay, let me go to the 4 hour because it's gonna make more sense over there. Sorry, I need to find our thing. Okay, there we go. Oh no. All right, yours gonna make more sense now. So as you can see, let me take a good example, like here, okay? So earlier, the price rejected here, it was resistance. It came back, around the same area, it rejected, okay? So this level was acting as a resistance. Later on in the future, the price went all the way up. When it reached out the same level, guess what? It acted as support. And every time the price reject out of support, is going to go higher. Okay, the price came back down, rejected out of support, went all the way up, came back down, broke support became resistance. Okay, the price rejected here, went a little lower, then came back and broke resistance. Therefore, this level will be considered as support for the time being. Then the price went higher, the price came back, rejected out of support, fell to go higher, broke support. Now support is resistance. Came all the way back down, came back up to retest the level. Guess what? This is resistance right here, right? Now guess what? Came back down. Every time the price fell to break resistance, it's going to go look for the next level of support. Came here, broke support, went down, rejected out of support, and came back up to look for the next level of resistance. Okay, came back down again, came back up, broke resistance. Every time the price break resistance, that resistance is going to act as support. See, let me do something so you can understand what I'm saying. So that's a brush, right? Look here, okay? If you go on the lower time frame, like 2 hours, you're going to see that that's like a clean candle breakout, okay? So this area will be a good entrance, a good entry price, okay? So 35 cents will be a good entry price for Dogecoin, and the next level will be 45 cents. Me personally, as soon as I see that that break of resistance, that means resistance at this point becomes support. Okay, and the next level I'm going to look for is the next resistance. This is support right now, right? So my next destination will be the next level of resistance. So when the price reaches here, I'll look to get some of my profit. So let's say I invested 500 and I see my balance going to 1,000. That's an example. As soon as I reach this level, I'm withdrawing all my profits and I'll let the initial investment keep working for me, you know? Now, if I see it comes back down, I might be like, I don't want to be greedy. So I'll be like, I'll wait. I might buy in this area. I might. I'm not saying buy. I say me personally, I might buy. But there is a probability of the price, of the price going lower. And as you can see, the price came, went lower, went back up, then fell to go up. At this point, I can be like, oh, my initial investment is still there. My balance is lower, but I'm going to wait until a good entry point. Okay. People will be like, oh, buy the dip, buy the dip. Buying the dip is good, but in which area are you buying the dip? Okay. If you're buying the dip here, it goes up and it comes lower, you're losing. But if you're buying, for example, this dip, okay, and it goes up, it gives you more flexibility. It gives you more it gives you a better risk reward ratio. Okay, buying the dip around key levels will give you the most probability of win. For example, here this is a dip. As soon as I see the price going up, I can be like, oh, let me jump in, okay, because it's around the key level. See this dip, I can buy this dip. All right, hold on. I can buy this dip right here because I know the price will come a little down and go up. It's around my key level. I'll buy the dip around the key levels, okay? See this dip? As soon as the price reaches the key level and breaks it, I'm buying, okay? My next target might be 73, but I'm not greedy. You bought here, you bought at 45 cents, you reach 55 cents, take your profits, you know? Now, if you're long-term investor, you might just put the money and, let it sit for like so long, okay? But buying and selling around the key levels, right, on higher time frames will give you the best probabilities when it comes to entries. Okay. All right. Sorry. Let me delete this sketch. Once again, you have to know why you're buying Dogecoin. You have to know why you're buying Bitcoin. You have to have your own strategy. Okay. You have to know what you are trying to achieve. You have to know your own personal objective. You have to have a personal plan. You have to have a business plan. Trading is not gambling. Trading is not luck. Okay, trading is trading. Let me say is like a job. Okay, you have to know what you're doing. You have to know your own job description. Okay, you have to know what your own goals are. At the end of the day, everybody wants to make money, but you have to be organized. Do you want to be in and out, make a little bit of money every day? Do you want to invest, meaning put the money today and withdraw over a long period of time? You have to know your strategy. You have to know what you want. Okay. And I'll just go ahead and give you few more tips. Okay. So once again, identify your key levels. Understand that the key level can be both support and resistance based on where the price is. Now, does this work all the time? No. Does it give you the probability of finding the best entry points? For me, yes. I'll say in the comment section, give me your point of view. If you have questions, we can go ahead and go deeper in the topic. But the key is to find your key levels, areas where you know the most transactions are happening. And this area is one. This area is one. That's an example. This area is an area where you know the price can ever pivot, okay, go up or down. Okay, so you got to be able to identify these key levels, okay. And yeah, okay, let me give you a few tips before I decide to stop the video. Number one, never trade with money you cannot afford to lose. Okay, have a strategy. Remember that trading is 90% psychology and 10% skills. I see so many people out there investing 1,000, seeing the account going to 6,000, and they start believing that this account will go to 200,000 in 24 hours. No, you got to know, you got to accept the fact that the market goes up and down. You got to know, you got to learn to withdraw profit, because it doesn't matter if you made 7,000 in profit if you don't withdraw it. If you don't withdraw it and it goes to for example, $500, you lost all that profit. So you didn't make profit. So you got to know how to withdraw profit from time to time. You got to select your style. Understand if you want to be trading daily, if you want to be trading over a long period of time, if you want to become a swing trader, you got to keep it simple. All these indicators and all that, they don't always work. Okay, they give you pricing historical data, but like most of the time they don't work. Keep it simple. A few indicators I recommend are Fibonacci, the volume, right, few moving averages. But you honestly, you want to keep it simple with this strategy I'm using. Okay, you can use the volume to understand how many people, or how heavy of the how heavy this transaction happening at these specific moments are. You know what I mean? You got to learn to read candles. Okay, a good resource for that would be babypips.com, where you can go ahead and learn how to read candles. Okay, find instruments you are the most comfortable with, like options, indices, commodities, or currencies. You need to understand which type of financial instruments you are really comfortable with. Once again, trading is not a scam. Trading can be a scam if you're dealing with the wrong person. Okay, there are some brokers out there that are not legit, that cheat you on your money and all that. So you got to be aware, and do not overtrade. Okay, if you're trading today, you made $200 in profit and all that. It's not because you made $200 in profit in 10 minutes that it means that if you stay for 2 hours you're gonna make 4,000. No, you might end up losing that money. That's $200 more than what you had before. So take that money and walk away, because this market will bite you. Been there, done that. Okay. And me personally, with this strategy, is long term. Okay, you might be lucky enough, and the market will start flipping in the direction where you said you will go. But it's not gambling. This is strategy. Okay, buying around the key levels will give you flexibility over the long time. Long term, to make money. Okay. So once again, I wanted to keep this video really short. This is your boy Idris. It's my first video out here. So please feel free to make some suggestions. And yeah, I'll be more than happy to assist you. The next video will be over option trading, and I'll go deeper with this strategy. But right now, if you ask me, once again, I'm getting ready to buy Dogecoin, because based on my strategy, right? Based on my strategy, let me use this indicator we call Fibonacci. Um, you know, in the near future, I'll just go ahead and make a video on how to use it. Usually when I trade, I look for confluences. Confluences mean I look for double or triple confirmations. Okay. So now I see that around my key level that is here. Okay, let me move the Fibonacci. The top of the key level is support now. The bottom is resistance. I see that the price is rejecting out of support, meaning there is a strong probability of the price going all the way here. Okay. And what you do with Fibonacci is you look for a lower point. And here, out of nowhere, my lower point is another key level, right? That's a good coincidence. And then my highest point is here. And I'm looking for, you know, a rejection out of 62% or even 50%. Okay. That's me personally. And I see that the price rejected 2 times out of 50%. Actually, 3 times. Now, there is a probability of the price coming all the way, to 23 cents before going all the way to 33 cents. So I'll just go ahead and be conservative and maybe buy 100 or $150 worth of Dogecoin personally. I'm not saying do it. I'm saying I will do it. And there is also a strong probability if the price reaches here, there is a strong probability of this price coming all the way back here to 28 cents before going all the way to 40 cents. This is my current analysis of Dogecoin. I might be wrong, okay? But personal, I'm about to buy $150 worth of Dogecoin, and this is a 2 hours time frame. So I give it until next Monday to, I'm expecting Dogecoin to reach at least 33 cents by Monday, at least. That's my prediction based on my analysis, but I might be wrong once again. But there is a strong probability of it happening because the price is currently trading over 25 cents. Now, if Dogecoin goes under 22 cents, my probability might be would be wrong, and then Dogecoin might go even lower to the 17 cents area, 15 cents area. Actually, sorry, 17 or 16. Okay. Well, I wish you a nice weekend, and please feel free to leave your comment below. Thank you.